In this video, traders, we're going to look at the pros and cons, advantages and disadvantages of trading CFDs. Stay tuned. Hey traders, a very warm welcome to you. Thank you for joining me. Alright, so if you're first time to the channel, welcome. In this video, we're going to talk about the advantages and disadvantages of CFDs. If you're a CFD trader, you're into CFDs, you're into the markets, you're into all the stuff like that, you love trading, then you're going to want to subscribe, guys, because we have got lots of good stuff coming up, and we also have loads of decent videos of all kind of levels, all sorts of things, trading strategies, CFDs, spread betting, markets, the lot on the channel. So hit that subscribe button, have a little dig around in the video section as well. Okay, so let's get right to it. Pros and cons of trading CFDs. So a CFD is a contract for difference. Unlike buying a share, you do not own the asset. And a share purchase, the asset changes hands. You spend £25,000, you get some shares in return, you plop that there, the broker gets the money. A CFD is different. A CFD is a contract for the difference in price. So if you're buying a CFD, you agree to pay your broker the difference between the buy price and the sell price. If the sell price is lower, i.e. you lose money, you agree to pay that. And then vice versa. If the price goes up, the broker will pay you the difference. And that's how it works. And it's mark to market every day. And every day you get a profit, every day you get a loss, and it moves every day. And you can take that money out when you want as well. Unlike shares, we have to actually liquidate the asset. Anyway, let's look on the pros and cons. The big pro for CFDs is being able to trade on margin. What is margin? That is leverage. It allows you to put up a small portion of the notional value of the asset. So if you were buying £100,000 worth of shares in a normal share environment, in a normal broker, you'd have to put £100,000 with him, he'd give you the shares. Now, if you're trading on margin, let's say the margin requirement for that share is just 10%, then you have to put up just £10,000 to control a £100,000 CFD, the notional value of the CFD. In other words, you have exactly the same position, but all you got to do is put up £10,000. So there's a lot of benefits from that. As you can see, you can have bigger positions, you can have lots of different positions, you can broaden your horizons onto different things. It makes things a lot easier. Of course, there's no free lunch, we'll look at those in a second, but that's the big one why people trade CFDs. So number two, there's no stamp duty to pay. So in the UK, if you're buying shares, of course, you've got to pay your stamp duty. CFDs, because there's no asset changing hands, the shares aren't changing hands, you do not have to pay any stamp duty. You have to pay a commission, and the commission is normally a little bit higher than shares. Shares are normally a fixed commission, right, depending on who you're trading with. Some of the banks are bigger, but some of the kind of discount share brokers are going to be fixed commission. CFDs tends to be based on the value of the transaction, so it can be a little bit higher, but with the stamp duty, you're definitely going to be better off. Well, most of the time, you're going to be better off trading with a CFD. In terms of the commission, the stamp duty rolled in, so on. The third thing, which is the great thing as well, is you can go long and short. So in other words, you can speculate on a movement up in price and speculate on a movement down in price. Not often available to people trading shares. Normally you have to short the shares, borrow them, sell them in, lots of complicated things to do. CFD, very simple. You just literally sell those CFDs and you have a short position, which means that you are benefiting from a movement down in price. So if you're bearish on an asset, you're bearish on a share, you're bearish on a whole market in general, you can open up a short position of CFD and profit from a fall in that asset, just as if you were buying a long and it was going higher. Number four, useful for hedging. So a lot of people use CFDs for hedging portfolios. You've got a portfolio of stock and they think, I don't want to sell that stock, but I think there's going to be a few quarters of downturn. They can just short CFD on the whole market or a sector or an individual stock to kind of hedge their position. So it's a nice way of kind of controlling things with that. Okay, the cons. So the big con is you've got no voting rights. Unlike buying the shares, where you've got an actual voting right. Obviously, if the shares are voting right shares, some of the ones in the US slightly different, but majority, 99% of the time, you buy shares, you get voting rights equivalent to the shares you've got. You don't get those with a CFD. So that's worth bearing in mind if it's something you're after. The other con is that it's easy to over leverage. It sounds great having the margin thing, and it is great if used sensibly, but like any tool, guys, you know, a drill is a useful tool unless you go stupid with it and do things you shouldn't be doing with a drill, a car, a knife. You know, this is the real world. It has risks to it. If you're over leveraging yourself, you can get in trouble. But if you use it sensibly, it's a very handy way of getting more exposure to the market, more bang for your buck, if so to speak. All right, so number three, no market impacts. What do I mean by that? So I put a little star by this because it's not always the case. So normally if you're buying shares, you may well take some of the shares from the exchange, and that has a market impact. Now, this is a minimal thing, but I just want to put it on there because I'm a kind of trader, and so it's kind of, I think about things like this, how does it have an impact on the actual market, the underlying. Normally if you're buying shares, you go to the market, especially if you're someone like the New York Stock Exchange or NASDAQ, you buy those shares, you're taking some away from that offer, and so you're contributing to perhaps the momentum of the stock. Especially if you're talking from an intraday perspective, you're contributing to that supply-demand imbalance. So you're buying and everyone else is buying is what causes the price to go up. Often CFD brokers will not put the underlying market. Sometimes they do, some brokers do, depending on what they're trading, but very often they're kind of making a two-way book. And so you buy 10,000 CFDs, they're kind of assuming that they'll get an opposite position sometime and they'll be making the spread in between the two. So you may not have a market impact, which can be, I mean, it's very, very minor compared to some of these, but I just wanted to put it out there and point it out. I guess the other con I've not mentioned is that you have a financing charge when you hold a CFD overnight. So when you hold a CFD overnight, because you're using margin, then you're going to have to pay a small fee overnight, a small percentage. It's an annual percentage divided by 365. So every night you have that position, a long position, you have to pay a small fee. But that's always worth looking into anyway, depending on how long you're holding the position, the broker you're using and stuff like that. But it's worth bearing in mind that it can be a con. But then of course, you don't get any free lunch due. That's why you get the margin. So you've got to weigh up kind of how long you're holding a CFD for, what your objectives are, if you're a short-term trader, if you're a long-term trader, what sort of size position you're doing, and then look at all your options. This CFD might be the right thing for you, it might be absolutely perfect, it might not work for you, but that's the CFD, guys, anyway. And like I say, if you're interested in the markets at all, you love the markets, you love trading, love everything about it, hit the subscribe button, because we are all about trading on here, all about becoming better traders, all about educating ourselves, studying the great strategies, all that kind of stuff. And if you feel like it, the notification bell is there too. Thanks guys, see you next one, take care, bye bye.